to Flex Candle, where we read the candles and flex the moves. I'm Flex, and today we're diving into a full top-down analysis on Bitcoin. We're going to start from the higher time frames, work our way down to the lower time frames, and check to see if we find any good setups. Now remember, this is not financial advice. I'm not a financial advisor. You're responsible for your own trades. Always do your own research and trade at your own risk. All right, guys, let's hop into the chart. And right now it's Thursday. It's about 5:45 p.m. Eastern time. The current price of Bitcoin is at 106,320. We've been bearish today. We've been falling down a little bit, trying to maintain certain levels. Now the monthly candle closes in about 2 or 3 days, and we're definitely going to go over that when it closes. But right now we want to start looking more or less of what's happening, and the stochastics are pointing down. I'm starting to see a little curve here, but you know, hopefully we do end up curving up. But again, this is going to take months and months to play out. We have to see where this candle is going to close. Right now we're looking bullish. We had a green candle last month. Now we're getting another green candle, but as you can see here with these wicks on these candles over here, the same thing is happening over here. There's a lot of resistance here. We made it almost to $112,000. Now we're currently at 106. So we need to see where this is going to close in a couple of days. This is going to be very important. Now in the 2-week chart, we see that the stochastics are on the way up. So that is giving me some positive vibes that we are still currently bullish, because if we continue going up, the price should continue to move up, or at least sideways. I'm not liking this red candle so far, but we do have 10 days before this does close. We are far away from the 21-day moving average that is currently at 88,284. We head over to the weekly. You guys already know I have this in a falling wedge that should break us out to 117,000. So far it broke us out to a 112 most of the move. So this is a winning trade so far, because again, you don't have to wait for the measured move to take profits. But I'm still going that we're going to hit 117. I'm still going to remain confident in that until certain things happen, and I'm going to explain to you what those certain things have to happen in order for me to start getting bearish. Now the stochastics here on the weekly just got up here, so I'm hoping for them to drag here for a little bit before they come down. That way we could have higher prices, but we have to be wary that we are far away from the 21-day moving average, which is currently at 93,921 on the weekly. We still have 3 days before this candle closes. Currently it's a red engulfing candle. That's not looking good. Again, we can't get past this point, but this end up being a double top where we end up falling down. The summer's coming, things start to get a little bit slower. We have to be prepared for that. We head over to the 3-day chart. Stochastics are on the way down. Again, we have a day before this candle closes is a red engulfing. We're far away from the 21-day moving average here at 94,000. This is not looking good to me. On the 2-day chart, we're also on the way down. We have 2 red candles so far. 1 day before we close, far away from the 21-day moving average, which is at 100,882. So that's not looking good. We go to the daily now. We're actually losing the 21-day moving average. We're like slightly above, but we're barely keeping up with the 21-day moving average. This is starting to get a little bearish for me. Again, the golden cross happened here, so this is the bullish point. The stochastics are low, but they're dipping down even more, and we could drag here for a little bit. Like, look at over here how we never came up and we stayed down. So something possibly could happen over here like this, and we could continue to come down. I want to tell you guys right now, we lose this 21-day moving average, we start to close candles, daily candles below the 21-day moving average, the next stop is going to be the 50-day moving average, and that's currently at 97,277. I really don't want to see Bitcoin below 100K. So it's very important for us to stay above this 21-day moving average. Today's candle close is going to be very important. We head over to the 22-hour chart. Stochastics are dumping over. We're on the way down. We actually lost the 21-day moving average, and now we're going to go test the 50-day moving average. Here it's at 104,000. You guys have been keeping up with the episodes. I've been telling you for a couple of days that I see Bitcoin going a little bit down or going sideways and playing between the range of 103, 110. And if we do break 103, I expect this to have some good support at 100,000. If we lose that, it's going to get a little bit bearish here for me. All right, let's head over to the 8-hour chart. And on the 8-hour chart, stochastics again dipping over. We lost the 21-day moving average. We lost the 50-day moving average. This is not looking good. The next stop is the 80-day moving average. That's at 103,981. Pretty much between the range I'm telling you guys. Now on the 4-hour chart, stochastics again, they couldn't make it up. We're rolling over again. This is starting to look very bearish for me on this 4-hour chart. We lost the 21-day, the 50-day, the 80-day, and the 100-day moving average. Our only line of defense right now is this 200-day moving average at 102,156. Guys, if we start closing candles underneath this 200-day moving average, average, that's what's going to get me bearish, because on the daily, the 21-day moving average, which we have to stay above, is at 106,162. So if on the 4-hour chart we end up going all the way down to the 200-day moving average at 102,000, that's $4,000 less, and we break the 200-day moving average, then we're possibly going to go a little bit lower and play around with the 90K range again. I really do not want to see that. Now here I had two patterns. I had the falling wedge that was supposed to break us out to 117. It didn't. We only got up to like 111. I also had a cup and handle that was supposed to break us out to like 113. It didn't. Only brought us to 111. Again, in both of these trades, in this falling wedge, you could have made some profit. Again, we didn't do the whole measured move, but there was profit there. In the cup and handle, there was slight profit. I wouldn't even count that this cup and handle made it out. But I told you guys, if we do not break out of this cup and handle, then the next thing would have been this M pattern here, and it did the exact measure move that brought us all the way down here, and now we're starting to go down even lower. So I'm going to get rid of these patterns, and now I'm going to make a new pattern. Currently I'm still bullish because again, we're above the 200-day moving average on the 4-hour. If we lose that, I have to get more bearish. So what I'm seeing now is some type of a falling wedge this way now, and then the measured move for this is going to be all the way at 116,085. So basically 116,000. This does not take us to 117. Again, that's what I'm thinking that we're going to be going to. This pattern might not even play out because we are currently bearish. I'm trying to force it here a little bit. It still kind of is in a falling wedge pattern. We broke out, we broke back in. Now it looks like we're breaking in. In order for this to stay valid, we have to stay inside this pattern. So the lowest we could go is basically 104. We could dip underneath and come back up, and maybe this is the pattern that gets us out, but I'm not banking on it just yet. I have to see how the rest of the day and how these candles end up closing, but we're gonna leave this here right now, and I'm thinking that hopefully if we're bullish, this could end up breaking out. Now if we take a look at the 1-hour chart, we see that the stochastics are low. We're coming up back up, but we lost the 200-day moving average. You lost all the averages right now, the 50, the 80, everything. The 21, we're about to close 2 candles bullish. We might make it back up here to the 21-day moving average, which is currently at 107,529. Since the stochastics are low, that's what I'm hoping for, and we have to reclaim the 21-day moving average and all these averages above the 200-day moving average as soon as possible. I already told you guys, if you lose the 200-day moving average on the 1-hour, the next stop is going to be the 2-hour, and as you can see here in the 2-hour, we lost it. Now we have a green engulfing candle that closes in about a minute, so let's see how that closes, and hopefully this goes bring us back up above the 200-day moving average. If we lose it on the 2-hour, the next line of defense is the 3-hour, which is at 104,000, and that's what I'm saying. If we lose it there, then the next line of defense is going to be the 4-hour, which is at 102. We lose it there, then I'm going to have to start getting a little bit bearish and think that we're going to be seeing 95K Bitcoin, 97K, maybe even 90K Bitcoin. We will have to see at that moment. So overall, that's what I'm seeing, guys. I'm still seeing that range playing out between 103K and 110K before seeing a bigger breakout. If we lose 103, I think we have support at 100. If we lose 100, we have to stay above 97K, guys. If we lose 97K, then we're probably going to go a lot lower. Hopefully that's not the case. All right, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, and subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.